right, I think. Hey, everybody. Hey, everybody.
What happens if my dad starts Tai Chi?
Turn that off. Hey, everybody. Can you guys hear me? Everybody can see me okay? Let me know. Put a comment in the chat here. You can hear me, Nina? Okay, cool. Thank you. I see the love. Welcome to the second session of the live stream. First of all, I want to say thank you. Thank you for the hearts that you guys are sending. Thank you for the comments in the chat. And thank you for being here. And I'm super excited. I'm excited to share with you just these two basic strategies that can be like literally life-changing. Selling puts, selling covered calls. Listen, you don't have to be day trading or doing all these crazy things, looking at computer screens all day. No, my motto is trade to live and not live to trade. So once you understand the fundamentals, literally it should only take maybe 15, 20 minutes per day. And the advantage of this live stream is because so we can walk through trades. Like when we were here on Monday, here's my computer screen, my Thinkorswim. So you guys remember on Monday, for those of you guys who were here, and by the way, this is going to be recorded, so if you miss it, don't worry about it. We put two trades in, right? So we sold an IBIT put, and let's take a look and see exactly what those are doing and kind of recap what we did on Monday. So here is the monitor tab on your Thinkorswim. So there's a few different tabs that you're going to look at. Listen, this stuff can be super confusing if you let it be, but it could be super, super easy if you want it to be easy. So here's your charts, right? So the charts tab right here, we're basically going to use two different things. We're going to use 1 year, 1 day, and 1 day, 1 minute. And the reason why we just look at charts is we just want to get an idea on where the stock is going. But I typically trade the same stocks over and over again, and it doesn't much matter about the prices. So don't fuss too much about like, hey, I think the price is going to go up. Hey, I think the price is going to go down. The advantage of options trading is we're not fortune tellers. We're not telling the future. We're not like gambling. We just want to make consistent income over and over and over again so we can live an incredible lifestyle. And basically that's what it's all about, right? So we have our charts tab. We also have the trade tab. You remember on Monday we went through, this is, the trade tab has our options chain, right? So let's say this is IBIT, for example. Here's how much the stock is trading for, 57.44. Here are our weekly contracts, right? And we just kind of open up a box to kind of get that contract. We can sort of make this smaller by changing the number of strikes. We're not looking at a whole bunch of stuff. We're looking at the last price. That's the last price that the contract traded at. We're looking at the delta. The delta is going to be the statistical likelihood that the stock is going to go from where it is now underneath the strike price in the case of a put before the contract expires. And we're looking at the implied volatility. Implied volatility, how much swing something has, right? How much up and how much down it has. And then the monitor tab is the other piece that we're going to look at. Now, me personally, I look at my positions on the Schwab page, but because this is a paper account, I can't do that. So I'm going to show you guys how to do that on the Thinkorswim page. So you're going to see that in the monitor tab right here. So here's our positions, right? We're going to see options right here in the middle. Here's our IBIT option. So do you remember we sold November 14th, 59.50 put. -1 means we sold that contract. Listen, we are never buying options. We are only selling options. Why? Because only people that buy options, they're gamblers, right? They want to, predict if the market's going to go up or the stock is going to go up or the stock is going to go down, and they want to 10x their money. So that's not what we're doing. We are becoming like the casino. We are taking in the flow on a regular basis, and we're only committing to buy the stock if it drops below a certain price, right? So we can see our -1 means we sold that one contract. The trade price, how much money did we get paid? So 0.74, you guys might remember, on Monday we sold an IBIT, November 14th, 59.50 put, and we got paid $74. $74 gets dropped into our account right then and there. We keep that no matter what happens. Now let's take a look and see what IBIT is doing right now. So IBIT is a little bit lower, right? So we sold a 59.50 put, and right now the stock is what we call in the money. This live stream is going to be so amazing, and the reason why is because instead of just seeing like how do you put a trade on, you're going to actually see what's it look like after the trade is on. This is going to be so amazing.
Do you have to deal with wash sale when trading this?
I'll answer that after. So when we look at these, when we look at the contract, we're looking at the IBIT. That's our 59.50 put. Right now IBIT is at $57.48. That means it's in the money. That means that the stock price is trading less than our strike price. What does that mean? That means anytime as of now, we might have to purchase 100 shares at $59.50 per share, right? So once the stock trades underneath the strike price, we have to be willing and able to purchase those shares. Now that said, typically contracts are only assigned at expiration. So what does that mean? That means that I would say probably 95 times out of 100, even though the price right now, 57.46, is lower than our strike price, 59.50, even though it's lower, we are not going to be assigned. We're generally only going to be assigned at expiration. Now, some people say, well, who chooses? How does that work? Who picks when you get assigned? So here's the way it works, guys. When you sell a contract, like I sold this particular contract, -1, whoever is on the other side of that contract, the purchaser of that contract, it might be like Jane Smith in, I don't know, Kansas City, Idaho, or wherever, it's up to her to assign the contract. And because most people trade options, buy options, and they're gambling, they just want to 10x their money. They want to, buy an option. If they're right about the direction, they can turn their $100 into $1,000 or something like that. Because of the structure of that, most of the time they're only assigned at expiration. Here's what that means. Here's the big takeaway for that. That means this. Right now, IBIT is in the money, so it's $57.53 per share. And as long as nobody assigns that contract, it could kind of bounce around, and then it could go back up. And if it goes back up above $59.50, we are not buying the shares. So you have the distinct advantage when you are selling options. And I'm going to get to the questions as we go, but I just want to kind of walk through sort of those two trades that we put on Monday and take a look and see how do we look at that now, right? Now let's take a look right here. So this is going back to our monitor tab. So we sold this particular contract. We got paid $74. Right now, this is trading at $215. What does that mean? That means the price of IBIT has gone down, so the value of the put has gone up. Now, don't worry if that's confusing to you. It's totally okay. A lot of these things, it takes a little bit of repetition, but once you kind of just keep going through it, it becomes like second nature. And the reason for that is as the price is coming down, the put is right now it's in the money, right? So it's more expensive. It's more likely that the stock is going to end up below that strike price, below that price of $59.50. So here's what this price represents. Now, market's kind of just like the mid price. So don't fuss over the details. What I want to do is I want to give you guys the structure, the foundation to kind of say, okay, this is not that hard, and then let me kind of maybe look into this a little bit further, that kind of thing. I want to give you guys the Cliff Notes version, right? Because we're only going to be here for 30 minutes, maybe 40 minutes or something. So there's only so much time to talk about it. So I want to tell you only the important things. Here's what this means. I sold this contract for $74. If I wanted to buy it back, I would have to pay market price. So right now, market price is $2.10. Also known as $210, right? Because we're going to always multiply times 100. That means I sold it for $74. If I wanted to change my mind and not have to buy the stock, I could anytime before the contract expires on November 14th, the close at 4 o'clock Eastern time, I could buy that back. I would pay whatever the market price is. So that means that I sold it for $74. I would buy it back for $210, and then effectively I would have lost, let's say, $210 minus 74, $136. Now, I'm not going to do that, and the reason why I'm not going to do that is because I like IBIT and I like Bitcoin, and I'm okay if it goes down. And in fact, if it continues to go down, I'm going to sell another put, and we're probably going to look at that Friday because we're going to be in these sessions Monday, Wednesday, Friday. When you sell a put, you have to be prepared. Okay, I'm going to buy the stock if it goes down. What are you trading? You're trading a stock that you like. You're trading a stock that you like. You're trading a strike price, the price at which you're choosing. You're going to pay for those shares if the price drops below that price, and you're choosing the expiration date. And what did we talk about? I only look at like a 1 week expiration date. Why? Because I want to create income every week, right? And I don't want to tie up my capital for a long period of time. So we're gonna kind of just going to leave that one alone. The other Monday, we also made this other trade, BBAI, right? Big Bear. So what did we do? We sold the put on November 14th, $5.50 put. And now look at the price of Big Bear right now. It's up actually 15%. Let's take a look at the chart. So it's up a lot, right? So here's our 1 year chart. And what did we talk about? When stocks have volatility, they go up a lot and they go down a lot. That's how stocks work, right? So look at this gigantic upswing right after the market opened this morning on Big Bear. So we had sold, let's go back to the monitor tab, we had sold a 550 put, and right now Big Bear is trading at $6.94. See the price right here? $6.94. So let's take a look at this put. So we had sold this put -1. Do you remember we got paid $30, right? We keep the $30 no matter what happens. Now this particular contract is trading at a half a penny. So I can actually buy this back for $1 and take the risk off the table. Who has questions about that? Let me know in the comments, and I'm gonna pull up the chat in a moment, and I'm gonna walk through this. But I wanna kind of get a sense of who understands what I'm talking about and who doesn't understand what I'm talking about. Let me just take a look at the comments here. Let's see. Just give me a moment. Yes, I understand. Questions about BBAI. Says you are down 50 cents. Okay, let's go through this. I want to explain this to you. Okay, so I sold this contract on BBAI, this $5.50 put. And by the way, for you guys who have not taken or looked at a lot of the videos, I have a couple of 6-hour videos for free on YouTube. I highly recommend. I want these sessions to be most effective for everybody. So if you haven't done like some of those big programs, I highly suggest you do that, because that's going to give you a foundational understanding of what's a put, what's a covered call. That way you don't feel as lost. I did include a link in the Monday comments, so you want to take a look at that. But let's kind of go through this. Okay, I sold a BBAI November 14th. $5.50 put. -1 is because I sold it, right? It's always going to say -1. I took in $30 for that particular contract, and here's what the contract is worth now. So what I'm going to do is I'm going to buy this back. So here's what I'm going to do. I'm going to go to the trade tab. Here's the date, the November 14th. Here's my contract, right? Puts are going to be on the right-hand side. Calls are on the left-hand side. Here's the date, November 14th. We know it's BBAI. We're going to check this up here, right? And these recordings are going to be on YouTube as well. So I'm trying to go slow, and I am committed to not going super fast because I don't want to lose anybody. But if you have to watch this again, just watch it again on YouTube. Here's our implied volatility. Here is our position marker. You see it says POS in the red here. That means that that's a position that we have, right? Now to buy this back, somebody had asked earlier on my YouTube, it's kind of confusing. Sell to open, buy to close, limit order, market order, all these things. Listen, I don't want you guys to get confused. This can literally be as hard as you make it or as easy as you make it. I encourage you to make it easy, and that's why I'm giving you a lot of these, cheat sheet kind of things, like a abridged version of how to do this. So I'm going to click on the ask, right? So, and if you don't remember the bid or the ask, the bid is going to be the lower number. So when you're selling a contract, you're going to click over here. And when you're buying a contract or buying it back, you're going to click on the bigger number, right? And don't worry if you click the wrong thing. Like, for example, let's say I click the wrong thing and it pulls up sell. Here's my trade window. I could just change this. So I'm buying one contract. So it's very, very easy. It's confusing at the beginning because it's new, right? But once you get the hang of it, it's very, very, very easy. So, so here is our, I just want to take a look here. I always kind of like keep the real estate where you can kind of see everything together. So you see your option chain here. You see your trade window here. I'm buying one BBAI back, 550 put, for $1. Now, why would I want to buy this contract back for $1? Anybody know? Let me know in the comments. What do you guys think? Why would I want to buy this contract back? You want to manage the risk. Yes, you want to take the risk off the table. So a couple of you guys said the same thing. Here's the thing. If the most I can make on this contract was 30 bucks, right? Because when you sell an option contract, it's a finite number. It's a finite income, right? So I got paid 30 bucks. It doesn't matter where the price goes. I don't get paid more or less, right? So it's that $30. It's like a static number. Now, if I can buy that contract back for $1, like why would I not do that? What I'm doing is I'm taking the risk off the table, and the reason for that is this. Listen, a lot of things happen in the market. I'm sure that you guys have seen. Sometimes things go super high, like very, very quick, and sometimes things go super low, like very, very quick. So if I already made like most of the income, 29 out of $30, then why don't I just take what if BBAI tumbles tomorrow? Later today, tomorrow, Friday. Why not just take the risk off the table? So I'm a big believer, listen, it's so easy to make money and it's harder not to lose it, right? Because number one, we don't know where the market's going to go. So sometimes like we can think that it's going up and our stock is doing great, but then something happens in the market and it drops like a rock. So we want to take the risk off the table. So how do we do that? So we click on that ask and I have this sell box or buy box up. I'm buying one BBAI November 14th, 550 put for $1. I can change the limit order or the order type. I can make it a market order or a limit order. Don't worry about all these other things, right? Again, like you don't have to make it too confusing. When you buy stock, this is how I do it, right? And again, you're going to find your groove, but the way I do it, so I can share how I do it, and I've been doing it successfully for a really long time. I use market orders for stock. So if I'm buying stock or selling stock, I'm just going to do that at the market. And when I'm trading options contracts, I'm going to put a limit order. Limit order means it's like $1 or better, right? So this is 0 bid, $1 ask. And the reason why it's so cheap is because the price went up so much, right? So the price went up 15%. So the price shoots up, the value of the put drops down, yeah? So I am going to buy it back for $1. I'm going to hit confirm and send, and I'm going to hit send. Now we should see our trade fill any moment here. Sometimes these paper accounts take a little bit of time, but we're going to see our trade fill like in the upper left. So we're going to take a look. Now, while we're looking for that, I want to make this clarification. If we are buying it back at the higher number, if we are paying the ask price of a contract, it will automatically fill, right? So what I mean by that is this. Sometimes people ask, okay, what happens if nobody's buying, right? What happens if nobody's selling? What happens if I'm trying to buy my contract back and there's no seller? Or what happens if I'm trying to sell a contract and there's no buyer? That doesn't happen. So what you want to look at is anytime, maybe just write this down. I would encourage you guys, like have a little notepad like next to you while you're listening to this. Put your phone away. Don't have like annoying distractions. And then write this down. And this is kind of like an important thing. If you're buying back something at the ask price, there is already a seller at that price. So you don't have to go find a seller. It's not like somebody won't be matched up. There's market makers that match buyers and sellers. The reason why we haven't seen it fill yet, and a fill is like the trade actually execute, is because these paper trades, these paper accounts trade a little bit differently than real accounts. I don't even usually recommend that people trade paper accounts. I mean, the advantage is you're not using your own money, but they don't really work exactly the same as a real account, and it's not your money. So you are going to think about it differently. So if you're using paper trading, great, and if not, that's okay too. I haven't seen this fill. Let's see. Yeah, I haven't seen this fill yet. So my contract, my position is still here where I'm short this BBAI. But if this was a real account, this would automatically fill. Let me take a look and see some questions. Let's see. Just give me a moment while I kind of skim through. Somebody said, can you please explain the delta? The delta is going to be the statistical likelihood that the stock is going to go from where it is down to the strike price before it expires. So in this particular trade, BBAI, because the stock went up so high, like I said, it's up like 14, 15% right now. See how the delta is 2? When we had sold this on Monday, I don't remember what the delta was, but it was higher than 2. So that means it's approximately a 2% likelihood that BBAI is going to go all the way from 697 way down to 550 over just the next couple of days. So it's not very likely. Does that mean it can't happen? No. It's just like the approximate likelihood. Yeah? Let's take a look. I understand. What happens if the company goes bankrupt? If the company goes bankrupt, you lose your money. So that's a good question. So let's say in this case with BBAI, I sold a 550 put. That means I'm committing to buy 100 shares at 550. So if the stock goes down and then I have to buy 100 shares, if the contract gets assigned, and I buy 100 shares at $5.50, if that company goes bankrupt afterward, I would lose my 550 bucks. That's the way it works. I mean, you're always gonna have risk in the market. There's not any, like, if you want risk-free, put your money like under your mattress. There's always going to be risk, but you want to identify and kind of evaluate, is that like a risk that you want to take, you feel comfortable taking? So good question. Let's see. What will you do with IBIT if it goes down and down? We're gonna take a look at it. I like IBIT. If it goes down and down, I'm going to buy more. Here's the thing, guys. If I like IBIT at $59 per share, I had sold the $59.50 put, right? If I like it at $59.50, I like it at 58. I like it at 57. I like it at 55. As the price goes lower, it becomes actually more attractive. So I don't understand why people sometimes with stocks, they're trading a stock and their stock goes down and then they feel all kind of like squirrely about it, or they feel bad, or they don't like it as much. If everything is still the same, you should like it more. So if it goes down, we're not going to do it today, and that's the advantage of doing this session Monday, Wednesday, Friday. I'm going to see where it is on Friday, and if it's down, maybe I'm going to sell another contract on Friday and then average my cost down. So we're going to talk about that at that time. So let me know in the comments section what other questions you guys have. Let's see. Hello. So people saying hello, I appreciate that. Do you have to deal with wash sales? Wash sale, don't make things more confusing. A wash sale is, okay, like let's say I am trading BBAI and then I buy 100 shares at 50, I don't know, whatever the price is. Let's say 550 because we sold a 550 put. And then let's say the price goes down and I sell my shares. A wash sale only happens, and really you don't have to really focus that much on it, is if you sell your shares for less than what you paid. Now, generally, we're not going to do that, right? So when you own stock, right? So like we're gonna see like, okay, if we have to buy this stock on Friday, if we get assigned, we're gonna sell a covered call against it for higher than what we originally paid for the stock. Generally speaking, we're not going to sell our stock at a loss. So a wash sale will only happen if you sell your stock at a loss and then you rebuy within a 30-day period. So just don't confuse yourself about it. It's really not that necessary, so that's not really applicable. Let's see. Let me take a look here. Did you set up a market-to-market account? I'm not sure what. Some of these questions, I'm not sure exactly what you mean by that. Somebody asked, this is a good question. If Friday comes and IBIT put is still underwater and you have to roll out or down, listen, a lot of people talk about rolling. I don't want my viewers to talk about rolling here. I don't fucking roll contracts. It's a stupid thing to do. So don't roll contracts. So here's what I mean by that. Let me go through an example. So IBIT right now, I had sold a let's see, I had sold a 59.50 put, and right now the stock is 57.60. So sometimes what people do, their thought process is, okay, oh my gosh, IBIT is underwater, like the commenter said. I wouldn't say underwater. I mean, the stock went down. I mean, that happens. Listen, guys, stocks go up, they go down. It's to be expected. You have to expect that. You can't be thinking like your stuff's going to just go to the moon and that's it. That's going to happen. So what the comment is asking, if the stock continues to go down, are you going to roll that? In other words, am I going to buy my contract back, right? So we talked about this contract I can buy back for $200 right now. So I originally got paid $74. I can buy my contract back for $200. Rolling is, and I know this is like a very perhaps unpopular opinion, rolling is the dumbest thing any trader can do. And here's why. Because when I sold this contract, I'm okay to buy 100 shares if it drops below $59.50. I like Bitcoin. If it goes to $55, if it goes to $50, I'm going to buy it. The thing I'm not going to do, I'm not going to buy this back and take a realized loss. Now, here's the thing about options, guys. When we talk about stocks and options, we're talking about paper gains and paper losses and realized gains and realized losses. I want to create realized losses from week to week. I do not want to create, I'm so sorry. I think I just, let me back up. I want to create realized gains from week to week. That means I want to put cash in my pocket every single week. I do not want to create a realized loss. What's a realized loss? A realized loss is like somebody just went in your pocket and took some dollars out, right? I don't want to do that. So I'm never going to roll my contracts. So that's, now technically it's also rolling. I don't want to get too much in the weeds. Like when people talk about rolling, what they're talking about is mostly this question. Okay, your stock is underwater. Are you going to buy your contract back and then sell another one for next week that has a lower strike price? Absolutely not. That's the dumbest thing that anybody can do. I know that's not a popular opinion. A lot of people do that. I don't know. Do it for 10 years and tell me if you're successful. I don't do that ever, and I think it's one of the dumbest things. And then also, like, not just that, but like when you sell a call. Now it's easier if we look at an example as we go in live time. But if I was to sell a covered call and the stock shot up, a lot of times people say, "Oh my gosh, I'm losing money. I should have kept the stock. I'm going to roll that out." We're not doing that either. I'm going to show you examples as we go, but that is also one of the dumbest things that anybody can do, in my view. Listen, like you're going to find your groove, but I'm telling you what's has been successful for me after a whole bunch of years doing it like full time, like not working for anybody and just doing this on a regular basis. I think that's a mistake. Do you ever sell calls below your strike? So what does that mean? That means that let's say I buy BBAI for $5.50. Am I ever going to sell a covered call for, let's say, $5 or $4.50? The answer would be no. I really don't want to create realized gains. I want to focus on, realized losses. I want to focus on realized gains on an ongoing basis, and I do not want to create realized losses. So I'm generally, if I'm selling a covered call, and we're gonna see examples of that. Actually, let's just buy something, and we're gonna see it now. So BBAI is up. Let's just do a trade on that right now. So when things are up a lot, you see how the stock is up 15%. When the stock is up a lot, calls are up a lot, right? It's just that's how that's just how it works. And if you don't remember that, that's okay. You're going to recognize that as you get more familiar with this and more experience. Okay, so I'm going to click on the trade tab. I'm going to click on here, right? I'm going to buy 100, right? Buy 100 BBAI, and I'm going to buy at the market. So generally, I'm going to buy things at the market, right? So I'm just going to buy at the market. I'm going to hit confirm and send, and I'm going to send it. And then this is going to tell me in a moment what my fill is. I don't know why these fill prices. Oh, there we go. So I bought 100 shares at $7.01, right? So I'm not going to sell a $7 call generally because $7 is less than $7.01, right? So I'm going to sell a $7.50 call, and let's just take a look and see what that is. So a $7.50 call right here. Calls are on the left, right, and puts are on the right. So I'm going to go to the $7.50 strike price. I'm going to go to November 14th. It's 14 bid, 15 ask. I'm going to click on the lower number, right, because I'm selling this. So I'm selling one BBAI November 14th, $7.50 call. Now, why am I not choosing an $8 call? Me, the way I do it is I want more premium, right? So if I was to sell an $8 call, I'm only going to get like $6. So I'm going to go closest, I'm going to go higher than what I paid, or either what I paid or higher than what I paid to get the most amount of money, right? So it's 13 bid, 14 ask. I'm going to keep it as a 13 limit price. I'm not going to ever put an order in at the market for options, and I'm going to hit confirm and send, and I'm going to hit send. And then we're going to go through some examples on Friday as that stuff, we're going to see the fill. Now, if this is a real account, there's the fill. So I got paid 14 bucks, and then also you're also going to see it in the monitor tab, right? So here's our positions, right? Here's our IBIT, 59 put that we sold, -1. We got paid 74 bucks. If we were to buy it back, we buy it back for 197. Here's our short 550 put for BBAI. We sold it for 30 bucks. I have that order out there. I don't know why it hasn't filled. It's because it's a little bit annoying using paper money. So that's the only reason why. I think if let me show you something. If let's see. I think I can change this by one. I'm going to right click. This was the order that I was trying to buy back at $1. You can highlight the order and go to cancel replace order, right? And it brings up this box. So buy one BBAI 550 put. I'm going to just try to sell it or buy it back rather at $2, right? Confirm and send, and let's see if it fills now. So this shows the cancel, and then it'll be that new one that's working. Let me take a look and see some other questions. I bought back my call today. I lost a little because of the higher premium, but sold the 100 shares for a nice profit. Okay, that's a good point. So that's actually a really good point. Who is this? Kathy something. I appreciate you bringing that up as a comment. And what she means is this, and I think it's easier to walk through certain things together as they happen. But here's what she means. And that's an advantage of doing these live streams. So what we're going to kind of evaluate as time goes on is kind of like you do look at like your net gain, right? So you don't want to roll things, right? Because when you roll, like in my example I spoke about a moment ago, I'm going to buy my put back and I'm going to sell a new one for next week and lower because I'm trying not to buy the stock. That's actually like taking a realized gain to your pocketbook, right? So you don't want to do that. However, what Kathy is talking about is this. Let's say, like in my scenario, I bought 100 shares of BBAI, and then I sold a 750 call. Sometimes what happens is if the stock shoots up, you can maybe buy your contract back, take a loss, and then also sell the stock and take a big gain. And then as long as those net out to be a good gain, that's something that you would look as to evaluate. Now, I know that probably sounds confusing, and again, the advantage... we're not going to talk a lot about details, but Kathy, I want to say you're right, number one. And number two, we're going to walk through those scenarios as we move along these sessions, maybe Friday, maybe Monday when we see that. So, yeah, good point. Let me take a look. So somebody mentioned maybe buy back BBAI at the market. Oh, that's an interesting point. Okay, let's try to do that. So here was our buy one BBAI at a limit price. I'm going to, wait, that was the order history. I'm going to, let's see. Right here. I'm going to control or command click because I'm on a Mac. I'm going to cancel replace order, and I'm going to do it at the market. And let's see, buy one BBAI November 14th, 550 put. And that was a good suggestion. I appreciate that. It's still not going through. That canceled. Canceled the old one. Interesting. So it should go through. Again, these paper trades, the paper accounts don't actually behave exactly like a real account with real money. But what I'm doing is illustrating the concepts with you, right? Let me take a look. I know last time we went over, so we're gonna try to keep these live streams to like 30 minutes, maybe 40 minutes, something like that. Let's see. Keep money in your brokerage account to sell another contract at the lower price. That's exactly right. So that's exactly what we do. Listen, what you guys are going to do is you're just going to trade like a handful of tickers. Maybe start with one. It's totally okay to start with one ticker, maybe two, maybe three, and then you want to have money. So if that stock goes down, and we can because this is like a learning experience. We can actually do that now, right? So let's take a look. So what do we have? IBIT, we have our 59.50 put, and IBIT is down, it's not down a lot, but it's down 1%. Let's see, if I was to sell a 57.50 put, I'm gonna make it last trade at $69, right? So how do we calculate if that's a good deal or not? What did we do? $69 divided by the capital that we need to make the trade, which would be $5,750. $5,750. And this is, what's today? Today's Wednesday, right? So this gives us a 1% annual or 1% rate of return, but for Wednesday, Thursday, Friday, really like a 3-day holding period. So the way I always annualize things out. I always like, okay, how many days is this? Divide by 3. And then how many trading days in a year? 252 to get our annualized rate of return. And in this particular scenario, we're making over 100% on our money. And notice this, right? So we had sold a 59.50 put. If we sell a 57.50 put, right? What happens if we have to buy the 100 shares? We could own 100 at 59.50, right? 59.5. And then if we buy another 100 at 57.50, right? This is how we average our cost down. This is how we calculate it. So we're going to add those two together, and then we're going to divide it by 2 because it's only like 100 shares of this and 100 shares of that. And that gives us 200 shares at 58.50. So then, guess what? Then we only need maybe a little bit of a pop to end up selling those shares. So we have some flexibility. We can sell one contract at the higher basis that we have, or one contract at the lower, or two at that average basis. I don't want to get too confusing because I want to walk through these as we go, like as we see it in real time. But yeah, so keep that in mind. So let's take a look. Order history, 1 working, 2 filled, 2 canceled. So interesting. I'm going to have to see why some of these trades aren't filling. I don't want to take up too much of time. In the interest of time, I'll take a look at that after. Also, just a couple of housekeeping things. I know last time it wasn't like saving the chat in the video. So I changed that to save the chat in the video, number one. And then also, I know a couple people talked about ads or something. So the ads will run on YouTube. That's because actually my channel, I don't make much money, but it is monetized in the sense that ads run and it pays me like a couple dollars. So there's not really any way to change that. But let me know, give me some feedback if you think I think I set the ads on as infrequent as possible, so it shouldn't be that much. Let's see, don't go all in. That's correct. So let's see, Lex Lynn says, don't go all in on one trade. SoFi is a profitable company. BBAI is not profitable. That's up to you to decide. So that's absolutely right. So first of all, right off the bat, I mean, you guys have to choose what you feel comfortable trading. Listen, I'm not recommending any particular stock. I'm not saying, hey, do this one over that one. You got to do what is best for you. I think I was using BBAI is because it's like a very inexpensive stock. And I think, if I'm not mistaken, they had some big contract with the federal government recently. It's got a lot of volatility. I don't trade it myself, though, in all transparency. And you have to trade what is good for you. And don't go all in, because if you, let's say, do a whole bunch of contracts and then that stock drops, let's say 20%, you might not have as much enough money or as much money to sell more contracts as it goes down. So that's something that's important to keep in mind. Okay, anybody have any other? I kind of skimmed through some of these questions. There's a lot of chats in the chat box. But if anybody doesn't have any other pressing questions on this particular session, I think what we're going to do is we're going to wrap this up because I want to really keep these sessions at 30, 40 minutes per session, Monday, Wednesday, Friday. Also, I have a little bit of a cold. I've been in New York and the weather here is terrible. I think I need to go back to LA. But I want to give you guys bite-sized pieces every session. That way, it's not overwhelming. And then I want to really look through these trades as we go to really give you guys a visual understanding on walking through that, right?
I'm gonna pin a question.
All right. So Nina's going to pin a question, and
I think you answered this
I
one,
appreciate the hearts too. How about MSTR? Let's see, it continues to drop. Do you continue to sell puts? Can't seem to sell profitable covered calls. And MicroStrategy is actually one of my favorite stocks. Last year, honestly, I think it was I made $267,000 just from MicroStrategy alone. It's one of my favorites, but you're right, it has been down a lot lately. I had MicroStrategy myself, and the stock is down. It's made a couple new lows. You want to kind of trade what's relative to your particular account. So you want to kind of evaluate, okay, what other stocks do you have in your account? And then also how much of that one particular stock that you have in your account, because you want to kind of find that optimal, okay, as it comes down, I'm going to sell another put, but what happens if it comes down? So it really depends on how much money you have in your account. Now, generally speaking, there are some kind of rules of thumb. I don't know, don't keep more than, let's say, 10% in any one stock, or let's say 20%. You don't want to go too heavy. I don't really believe so much about not going too heavy on particular stock because I think diversification is a little bit of a misunderstood process. What I try to do is focus on a good quality company. I think MicroStrategy is going to come back. I think it's down for a couple reasons. Number one, when Michael Saylor started, buying Bitcoin, like borrowing money, buying Bitcoin and putting it into now it's called strategy, not MicroStrategy. But when he started that, he was kind of the only guy that was doing that. Now there's lots of ETFs that have Bitcoin. There's lots of other companies that kind of capitalize on Bitcoin movements. So there's a little bit more competition in the marketplace. I think that's part of it. I don't really fuss over hey, why do I think this is happening, or why do I think that's happening? Listen, you can only fit so much stuff in your head. I don't know why it's happening. I don't know. But if I was a betting person, I'll just use that kind of analogy. I think Michael Saylor is super, super smart. He's a billionaire. He borrows money and buys Bitcoin. I believe in Bitcoin long term, for sure. If I had more money, I would buy more MicroStrategy or sell more puts as it goes down. So as an example, let's say we looked at a 220 put, right? Just as an example. The volatility is super high, 86%, 36 delta. This particular contract is last traded at $3.60. This is a 220 put. I don't know, let's take a look and see what our rate of return is. So $360 is where it last traded, divided by 22,000 because it's a $220 put. That gives us a 1.5% for a 3-day trade. Listen, guys, I could do multiply by 52, or I can divide by how many days. If you did a trade like this every week, how much money are you making? You're making 85% of your money, but really you're only holding it 3 days. It's a good trade. Do I have a crystal ball and do I know what's going to happen? No. But I could say this, if you already have MicroStrategy and you believe in that company and you believe in the solidness of that company and you have more cash, then as it comes down, then yes, you do sell another put and you buy more shares as it comes down because you're averaging your cost down. Yeah? Good question. Let's see. Can you show us how to find cheaper stocks like BBAI? The stocks relevant to my life are too expensive. I mean, some of these things you just look at Google. Like I just trade the same stocks over and over again. I like MicroStrategy. Tesla has been one of my all-time favorite for an extended period of time. I don't know. Just look at stocks under $10. I don't know. Just start looking here and then say, okay, well, I'm familiar with this particular stock, or I'm familiar with that particular stock, and see what resonates with you, and start with one. So it doesn't have to be as hard as what it sounds. So we're like 45 minutes past the hour. I'm going to wrap this up. I'm going to say for sure, I want to thank you for your time. Let me know, is this stuff helpful? Like, because listen, my intention is I want you guys to learn, because I think I live an amazing life and I don't have a regular job and I do what I want when I want. And I think that literally anybody can do that. And I'm passionate about, options. Like people trade like goofy stock. Like, dude, if you're trading stock and you're not trading options, like you're missing the boat. You're doing that because you don't know how to do another thing. So hopefully this is helpful. So I appreciate the love. Give us your mindset. Yeah, listen, it's not just about like stocks and mathematics. Like let's pull up a calculator. It's about like emotion, right? It's about I don't know, being like calm and grounded. Like, don't freak out when your stocks drop. A lot of these things are emotion. It's not necessarily just like, mathematics and just hitting a home run or something like that. So keep that in mind. Yeah. So anyway, I want to thank everybody for their attention. Friday is the next session, and as we go through, I'm gonna kind of work through the details and see why this stuff doesn't work. I'm not sure exactly. Maybe it's my connection or something like that. And but on Friday, we're going to go through and kind of take a look and see, okay, now we got stuff expiring. What do we do? Do we buy something back? Do we let it expire? Then on Monday, we're going to analyze that as well. Okay, what happened on Friday? What do we do on Monday? So that's the advantage of these 3-day-a-week sessions. So thank you again. I appreciate your time. Meet me here Friday, same time, 3 o'clock, and I'll see you then. Thanks a bunch.